Good morning, pro traders, and welcome to our Monday morning market review, held on behalf of GoPro Trading Academy. And I hope that this week is going to start picking up a little bit. I'd say that last week's markets were generally characterized by this sustained US dollar weakness, which has really turned a lot of our trends around, as we will see. And as a result, even though there was quite a bit of price movement, there weren't that many trading opportunities for us because generally, of course, our core strategies are in line with existing trends. And, once you've had the turnaround, which might give us a few overlays, really, we just got to sit in our hands and wait for it to resolve itself. And as you folks know, those of you who are part of the Academy, when we have trends coming to an end, we have three possible outcomes after that. We assume the first one initially, which is a ranging market, and typically we don't do a lot of trading in ranges. Alternatively, we might get a reversal, and I think that's pretty much what we are seeing, because there doesn't seem to be much in the way of resumption of existing trends taking place. And as we go through these pairs, you'll see that we've got quite a few where the market has literally crossed the entire spectrum of our channel and has broken out on the other side. So it does look like we might be seeing significant reversals taking place. But of course, as always, we wait for the market to prove itself. And we do that, or we observe that, we evaluate that, using our advanced price action techniques. So we don't really use indicators, as you know. We focus on what the market is telling us. We look at the clues that it gives us using the important components and elements of price action, being cyclicity and support and resistance. And we follow our methodology absolutely systematically. So that did give us a few trades last week. It was just a few, very few actually, but those that we did have were mostly successful. So it was actually pretty calm and quiet. And of course, leading up to non-farm payrolls, we stepped back from most of the markets. And as I say, let's hope that this week, moving into coming up to the last quarter of the year, is going to give us a little bit more activity and more trading opportunity. All right, so starting with the Euro-US dollar on the weekly time frame. Last week, bullish impulse candle showing that dollar weakness going against the direction of that previous trend, although it's not an established trend, it was a potential trend. So it's looking very weak at the moment. We've had 2 weeks close back inside of the channel. Nothing for us to do there as a result, of course, and it looks like that on the daily time frame. For those of you who are using our HDC channel methodology, I'm sure you all noticed that we did hit that channel resistance boundary. It actually went through the preceding price level by just over 1 pip, which just goes to show that after more than a month, the anchoring effect of that level was very significant. Now it has bounced off of it so far. It looks like we're getting that higher ringed. But nevertheless, I hope for those of you who are learning the methodology that we teach within the Academy, you can see how accurate very often these levels are that we have using our HDC method. So that being said, we are, however, inside of the channel. This, of course, is a potential overlay if you're just trading the end of phase 1 waves. However, if you are being more conservative and only using it for the end of trends, then obviously no trade because we are inside of that channel. All right, so that's the euro. The cable, similar kind of picture, although we've never had that breakout on the weekly time frame, still sitting inside of the channel, but another bullish impulse candle, similar picture as far as that's concerned, and deeper inside of our channel on the daily time frame. It has established a sort of a modicum of bullish cyclicity within that channel, but it's not a valid W pattern at this stage, although, of course, if this bearish retracement, if we do get one, if it continues to close outside the preceding phase 2's price territory, that would be a valid W pattern in the future. So keep an eye on that if that is what you're trading. And please remember, if you are trading channels, then you can't chop and change. So be absolutely rigorously consistent in your approach. Right, dollar yen on weekly, another nothing week last week, which looks like this on daily. So as you can see, it really is just chopping sideways. We haven't had a decent phase one wave for quite some time. So no interest to us there. Dollar Swiss on weekly, even a similar picture, put it that way, I'd say even worse. So also not interested in that at all. USD CAD, where we had, and we discussed this on last week already, where we had this attempted breakout. The market's just pulled straight back inside, and you can see that there's US dollar weakness again showing itself last week. So we've had just over 2 weeks of that. And for all of the US dollar pairs, you can see that it's really been a sustained movement, and it looks like that on daily. So definitely very much inside of the channel at this stage. Let's see what happens if we have a continuation of this dollar weakness. We might get a breakout there. On the Aussie, which, as you know, we've been trading for quite some time up until a couple of weeks ago. Well, we discussed last week, Monday, how we'd seen the end of the sustained strong trend with a close inside the preceding phase two's price territory. Well, last week it just continued that, and we've now got a reversal pattern here. Phase one, no question about that. For those of you using the LPO methodology, obviously you need to wait for this phase one wave to come to an end. But the preceding LPO, now obviously we can bin. This LPO range over here is still busy establishing itself. Remember, we do have this resistance level coming up soon, but let's wait and see. In any case, we are inside of a channel again on Aussie. So all of that activity that we had on this pair is pretty much over as far as the higher time frames are concerned. But dropping down to daily, you can see that we did, in fact, get this full reversal. As I mentioned, some pairs have crossed the full spectrum of the HTC channel. Here's one of them. Broke out on Friday, as you can see, Monday morning, typical Monday morning activity happening at the moment. But we have got a breakout over here. And of course, if we do get a phase two here at all, this would also be a valid W pattern. It might not stay outside of the channel, though. Let's wait and see what happens. In any case, for those of you who are channel traders, this is a valid setup for going long on H4 impulse. That's what it looks like on H4. So we've still got that pullback taking place. Started obviously on Friday post non-farms, but it's still very much intact. This is a strong trend on this time frame, and this is definitely a strong class 4M pattern, which of course, as soon as that turns around, means it's a class 1 W pattern. All right, so that's the first of our tradable pairs. You should be, I think, in a trade on Kiwi. So just before I get to the daily, of course, you can see we also had that, what has now proven itself to be a false breakout on the weekly time frame on the Kiwi, also with phase one. So this is just going to extend the dimensions of that pre-existing range on this pair on the weekly time frame. But you can see on the daily that we actually had the breakout on Thursday already. And as a result, we were looking for an H4 impulse on Friday, which we got. Now, it didn't hit the take profit, but we are already, I think, pretty much, if not, we're close to break even on this trade. So effectively break even. Obviously, another potential setup could be showing itself here, but remember, you shouldn't be chasing trades. I always like to encourage people to get the first one. If you get the first one and then you lose on the second one, you've made money with a convex strategy. But if you miss the first one and chase it with the second one, your long-term profitability or expectancy is much lower. So that's why it's so important to make sure that you take every trade. That is the heart and soul of consistency. All right, so that's the Kiwi. Moving on to our yen crosses here on the Euro Yen weekly time frame. A similar picture to Euro USD, I'm sure you'll agree with me. So we are still technically in a bearish trend, albeit very weak. And should we get a close, of course, above that preceding wave high, that means another phase one reversal pattern showing itself on the weekly time frame. So when it comes to Elliott wave theory, that would actually conform to a higher time frame Elliott wave ABC pattern over here. So that 5-wave structure on the weekly time frame, followed by ABC, and that potentially presaging another bullish move here on the euro yen of maybe similar proportions to what we had all the way going back to a year ago, basically, where we had the start of that long bullish move over there. So that's not meant to be a prediction, though, of course, it's just an observation. Right. So here on the daily time frame euro yen, we did have a marginal breakout also on Thursday. Couldn't sustain itself, pulled back inside of that range on Friday. And of course, if you're using single time frame analysis, then this wave is still intact. But if you've moved on to the dual time frame analysis that I'm teaching you guys, you'll notice that the cyclicity on this, although it is at the moment still bullish, it's looking like we may well be seeing a breakdown in that cyclicity. So let's wait and see. We did have a keyhole overlay over here. So just noting that was that entry. If you were going for an entry on a non-farm payroll Friday, that would have you would have shorted the market there, and I actually think that would have stopped out this morning for a small loss, so it didn't work out. But nevertheless, cyclicity is still marginally intact on this one. Let's wait and see if that changes. It doesn't look like this bullish cyclicity on that time frame is going to sustain itself, but let's wait and see. All right, but we do need to either get, if you're trading the channels, then we need to get another breakout of our channel over here in order to be able to trade that on the lower time frame. Right, GBP yen on weekly, also very much inside of a channel, nothing of interest to us, also kind of a similar picture to the cable. And on daily time frame, likewise, deep inside of the channel, possible W pattern stacking up for later in the week. Keep an eye on that if that's what you're trading. Swiss yen also have no interest to me whatsoever with that horrible price movement, and looking like that on daily, no interest in that whatsoever. Cad Yen, basically likewise, we discussed a week ago how we had that test of that support level and how it failed to break through, it's bounced back inside, so of no interest, of course. And that's what it looks like also on daily. Very, very weak bullish cyclicity. So that's not even remotely interesting, even in terms of a class 1 W pattern stacking up during the week. Aussie Yen, here again, also similar to Aussie USD. You'll see that we've got phase one, complete breakdown in that bearish cyclicity. That means that bearish trend is over. I haven't put in LPO channels here. You've got the other one for illustration. So if you are using that, you know what to do. But that is very much the end of that trend. So we can't look to trade this any further. But speaking of the lower time frames, on the daily, you can see that Friday we also got marginally, but nevertheless, we did get a bullish breakout of our previous channel. Not quite as significant as we saw in the dollar pairs, just showing that the US dollar and the yen are both showing real weakness at the moment. That, by the way, is a sign of a risk on market. When you have both USD and JPY weakening, it means that the market participants are moving away from the risk havens, the safe havens, and putting their investments into higher risk instruments or countries. And that the reason for that, obviously, I don't want to fall into the trap of the narrative effect, but it does seem that people are not worrying so much about COVID as they used to, and we've got this risk on conditions showing themselves. I'm not sure that that's going to sustain itself, mainly because of this incredible investment bubble that we're seeing on the stock markets. But anyway, that's another topic. Right, so that's Aussie Yen done. Have a look at that for trading lower time frames. Kiwi on weekly, likewise, false breakout, well back inside of the range. Phase one, not interested in that. But another significant breakout on daily, also on Thursday. So, that's one I think that you should have been able to take on Friday. Here you can see my trades. I don't think we've actually updated the this analysis to show the updated stops. No, we haven't. So you guys do know what that looks like, though. So just making sure that using the 3-6 rule, that is still the lowest low using our 3-6 rule. So you'll be able to trail the stop and reduce your open risk by about half. And again, if you didn't get that trade on Friday, maybe because you didn't want to trade non-farms, and that's fair enough, this is another setup. As I said before, you know, the longer you wait, the lower the expectancy, but it's a valid setup if we get a bullish impulse candle in 44 minutes time. So this is one where you can certainly keep an eye on that to see if you are trading the H4 impulse. And by the way, if that cyclicity does break down without us getting a higher close, and we get a bearish impulse candle, as you know, that would be a valid overlay. Right, moving on to our Euro crosses, Euro GBP, absolutely nothing of interest here whatsoever. Thank you very much. Okay, so on daily, we did get that marginal breakout on Wednesday. But by the time Thursday closed, we were back inside of the channel. So technically, this is still trending because we have not seen the cyclicity yet break down. And if it does, of course, that would be a false breakout. However, if we do get another bullish impulse wave, that would mean established trend, and also we'd then be able to start looking to trade that as well. You can't trade this with a W pattern, obviously, because this is a weak class 4 M pattern, meaning a class 2 W pattern when it turns around. So yeah, you just want to basically leave that and wait for the market to prove itself. Euro Swiss on weekly. Here we can see how the Swiss franc has also weakened quite significantly. Another safe haven currency, by the way. So there you have a bullish phase 1 wave and impulse candle with Friday's close. So quite interesting here on the weekly time frame. But of course, that is still very much inside of the channel. It does mean that we had a reversal at that support boundary. And that bullish move last week showed that we did get a breakout here. So if you are trading Euro Swiss franc, you could have started looking for a lower time frame execution, I think on Thursday already, and if not Thursday, Friday. And here you can see what we were looking at. We did actually have an overlay at one point. As I mentioned before, when you get a phase 1 wave, if you're trading the end of phase 1 waves and you have a breakdown in the cyclicity on the lower time frame, then that's the general picture for a setup for an overlay. We got it, went straight to take profit, so that was quite a nice little winner. The H4 impulse that we got into, as you can see, ultimately didn't work out because we trailed our stop to break even. And as of this morning, when we had a lower market open here, it actually took out our stop loss pretty close to break even. So that one didn't work out. We didn't really lose anything on it, but nevertheless, it's a bit disappointing because it's still looking quite bullish. But that's trading. Euro Cad, absolutely nothing last week. There's that weekly candle, just a bit of a high test, and it looks like that on daily. So really, absolutely nothing for us to do there. Euro Aussie, another one of these where we're looking at the Aussie strength over here, obviously, and Euro weakness. So both risk on pairs, these. But that bullish cyclicity here on the weekly time frame looking like it may well be coming to an end. It's still intact, however, although, of course, the 2 weekly lower closes inside the previous phase 2's price territory are showing weakness. So should we get a ring low before we get a lower close, then we won't be trading it yet, but it will still indicate that we've got a bullish trend over here. So might be coming to an end, showing real weakness there. Let's wait and see. On the daily time frame, that bearish move bringing us right back down to the bottom of our channel. No, we haven't really been able to do anything here. I think Surprise will note that, and I think we maybe did discuss this a week ago, this was a valid bearish overlay, and of course through the course of last week that went on to hit take profit. So that's all well and good. But coming all the way down to our support level over here, we're still inside of the channel. We need to wait and see. If we get a retracement and then a bearish resumption and you're trading class 1 WM patterns, that of course would be a setup for you. Euro NZD marginal close outside of the channel last week. So it is out. That's the thing. So I think this is the first one where we're actually looking at the weekly time frame with a breakout, with a trending market where potentially we can start looking for trades. Now remember, our entry needs to be outside of the channel being defined by this candle low. So on this broker, 1.66099. So you just need to make sure that you keep an eye on that. But if you want to trade daily impulses, this is the first one that we've seen where you might potentially get a bearish daily impulse stacking up through the course of the week. But do keep an eye on the fact that we are looking at this support level all the way back here, not the bottom of the daily channel. Remember, daily impulse, we look at the weekly HTC channel or a valid class 1 WM pattern. Obviously, if that keeps on going down, that's also valid for lower time frame trades. GBP Swiss, very much inside of the channel still last week, giving us this bullish impulse candle, pulling it straight back into the middle of the channel, so nothing doing there. And you can see here also on the daily time frame, we aren't interested in that. GBP Cad likewise, last week, pretty pathetic. In fact, all the Canadian dollar pairs seem to be doing very little indeed. That's the whole of last week. So nothing to attract our attention at all. Right, GBP Aussie, another one of these strong pullbacks, still in a strong trend here, strong bullish trend, despite the fact that we've got a very noticeable pullback. We've got a bearish impulse candle. That is a sign of weakness for this bullish trend. And yeah, obviously, that being said, if we do get a breakdown in cyclicity on the lower time frame of this, we'd be able to say that this is over and potentially a hybrid down on daily. Otherwise, you need to wait for this low to be ringed before you can start looking potentially to trade bullish, the daily impulse strategy on a bullish time frame. Now, remember, we've got these filters that we talk about. Some of you have got a trading plan that is aligned with a more conservative approach. Some of you are aligned with a more aggressive approach. And absolutely, you can use the different class WM patterns on your execution time frame to basically filter out lower probability trades. Remember, you've got to be careful with that, because although a trade might have a low probability of actually winning, if it's got a very high reward to risk ratio, that doesn't really matter. You still need to take the trade, and that's obviously the heart and soul of convexity. In any case, that bearish movement on weekly has come straight down to the support level on our daily HTC channel, our 4-wave channel. It bounced off of that on Friday. Another example of how well our assessment of the support and resistance levels is using the HTC methodology. And of course, that's very important for a price action trader, with support and resistance being a key element of our analytical methodology. That being said, this is a phase 1 wave. So if you're trading overlays on phase 1s, regardless of whether it's in a trend or not, then you would be looking for a breakdown in the sequentiality of cyclicity here. And in fact, I think we've actually had that. And that candle this morning, the first 4-hour candle of the morning, was in fact a setup to go long on this one. It's not doing anything at the moment. As I say to you guys very often, that Monday mornings are usually pretty dead. So slight gap over the weekend. In any case, in terms of the picture that we're looking at over here, that is a valid bullish overlay. Breakdown in that cyclicity means that, technically speaking, this bearish phase 1 wave on daily has come to an end. And it's come to an end at a support level. So no surprise as far as that's concerned. Last of the GBP crosses, let me just look at weekly first. Even stronger. Not only a bearish impulse candle on weekly inside of the range here, but it's an impulse wave or phase 1 wave as well. So we are on the side of the channel on weekly, so we're not that interested in that as far as that's concerned. But it does mean that the daily time frame looks like that. So quite significant, obviously, because and I think we did touch on this last week when we noted that we'd had that bearish breakout from our 4-wave channel. we're looking to see what was going to happen there. So this obviously, once we were outside of the 4-wave channel, and that takes us back to all the way back to the week before last, in fact, we were looking for bearish impulse trades here. So on the 4-hour time frame, of course. And we've had two. So this one goes back to the week before last. I'm sure we discussed that already. That's hit its take profit on the 31st. And then, which is obviously last week. Then we had another setup, and that hit take profit as well, just hit take profit on Friday. So two nice winners here on GBP NZD. I did notice that somebody had also taken a slightly later entry on this, and you're probably still in the trade. And again, it just goes to show that if you miss the correct entry, it takes you longer to hit your take profit, which means that the probability of that is lower and your reward to risk ratio is the same. So it reduces expectancy. All right, but anyway, GBP NZD being a nice pair to have traded last week, probably the nicest. And here on Cad Swiss, pulled straight back, another Canadian dollar pair that's just useless, back inside of our channel. Trend is still intact, just very weak. So we don't trade weak trends. And of course, here on Cad Swiss, daily time frame, inside of the channel, there's nothing of any interest there for us at all. Right, coming down to our Aussie crosses, the last ones that we haven't looked at yet. So you can see again the Australian dollar strength against the Swiss franc, which is a safe haven currency. And we've had this close marginally, if you just measure it here, our close here is 68074 to a high of 68045. So it's literally 3 pips on Friday that it closed above that high. And admittedly, you just need to check. That can vary from broker to broker. But this is a high liquidity broker, so I'm pretty confident that. In any case, it means phase one, bearish trend over, and that's that. And of course, this being the weekly time frame, this has been going on for quite some time. And as we also noted through the course of last month, we've had some very choppy price behavior, and you can see even with the size of the candles in the last few weeks, that is true, and this very strong reversal pattern here on a weekly time frame has taken place literally in the space of 3 weeks. On daily time frame, you can see again another long sustained wave here with a whole series of higher highs without pause now for going on 3 weeks. It's come up to the top of, well, this resistance level here, which is in fact the top of our, is it the top of our, no, it's not, I beg your pardon. So it's an interim level of resistance. We can't ignore it, obviously, but because we've got these very long waves, it does mean that both our 3 and 4 wave channels are lagging slightly because the number of candles in each of these waves. In any case, we can't ignore this as a resistance level. Let's see what happens. It's not actually trending for us yet. Excuse me. But it does look like that, as I said, that bearish movement is very much over. We did recognize that a week ago already, but last week just put an extra nail into that coffin. Aussie Cad, another Canadian dollar pair that we really couldn't be bothered with. That is a strong bullish impulse candle, but that's thanks to the Aussie. And that, of course, looks like that on daily time frame, with Friday managing to close outside of our 4-wave channel here. So if you've got a risk budget to spare for Aussie, then, and you should have, then this potentially obviously is a setup for you to go long on future H4 impulse trades, and we might well be getting a setup now. It was also a bearish setup for an overlay, which you may well be in had you started trading it early on a Monday morning. As you can see, I haven't done any analysis on that here, and I haven't taken any of these trades. But that doesn't mean it's not valid. So a valid bearish overlay here with that breakdown and sequentiality of cyclicity. So if you're trading single time frame, though, then definitely outside close, happy to look for a bullish H4 impulse there. Aussie Kiwi, last of our Aussie pairs. And we've also spoken about this for quite some time. Last week, giving us another quite strong bearish movement over here. It ended up being a low test, but it is still an intact bearish phase one wave as far as single time frame analysis is concerned. And if I was just to expand the daily time frame over here, you can see that it is also intact on daily. So bearish cyclicity, we had that bearish breakout previously. This was a very messy bearish phase one wave. That is true, but it is still a bearish phase one wave. That low was isolated last week, Wednesday, and it's pulled back somewhat. So that means that we would have been looking for two things through the course of last week: potential setups to short on H4 impulse, but also as that sequentiality broke down on the lower time frame, we would have looked for a bullish overlay. So speaking of which, therefore, on the H4 time frame, let me just bring this up to speed. I know that we had a nice winner on H4 impulse, followed by a setup on H4 impulse that ended up losing the full whack. But that setup was came hand in hand with a breakdown in bearish cyclicity on the H4 time frame, giving us a bullish overlay, which gave us just over what we'd lost on that bearish H4 impulse. So that just goes to show how the overlay works hand in glove with your core strategy. So winner, loser, winner, and then we had a hybrid setup to short, which didn't work out. We got stopped out on that for about 0.35, 0.38, I think. So there you can see how even though we had two winners and two losers, this was a very nicely profitable pair for us last week. Okay, so moving on to our final two currency pairs, Kiwi Swiss, another example here of a very strong reversal pattern, phase one, back inside of the channel, absolutely no trend. But on daily, that significant strength on the Kiwi coupled with weakness on the Swiss franc means that we did get a bullish breakout of the channel. So here you can see it covered in one single wave. It went right through the full dimension of our HTC channel and broke out on Friday. So definitely tradable in the bullish direction, looking for our H4 impulse there. And it looks like we may well be getting a setup to go long here again, or to go long here for the first time actually. Should we get a bullish impulse candle here on the H4 time frame. So again, you can see Aussie and Kiwi being our high action pairs as they have been for quite some time. And Kiwi Cad, Canadian dollar pair, not as much interest, but you'll notice that last week's candle was a strong bullish impulse candle. So that New Zealand dollar strength showing itself there. So not tradable on daily impulse, but definitely it was tradable on the H4. We got into a trade on this, I think, on Thursday, if I'm not very much mistaken. So the 2nd. And it's still going. We are trailing the stop on this. I just want to double check. 1, 2, 3, 4, 5, 6. Yeah. So this currently is correct, the correct position for our 3-6 trailing stop. And it's still there. So quite some distance still to go before we hit the H4 impulse take profit. But that's the one that's currently on the table. And that's it for our currency pairs. So let's just have a quick look at gold, where you'll see that the dollar weakness is showing itself with a bullish breakout. And again, I know I've spoken about this a few times. We had that flash crash several weeks ago. The price of gold has fully recovered itself from that and is way back up to this preceding resistance level that we had through the course of July. So on weekly, you can see there's nothing really much of interest for us there because we are deep inside of the channel. But there's that V shape that we've spoken about over the last couple of weeks, which is represented by this movement on the daily time frame. So bullish breakout there. If you are trading gold, then this is obviously potential setup for you to start looking for both impulse and overlays on the lower time frame. So moving on to our indices. Very little happening here on the Dow for quite some time. Flat price movements here on the weekly time frame, stuck up against the resistance level. Looks like this on the daily time frame, just going absolutely sideways now for well over a week. So I haven't updated the analysis on this. It's just pretty obvious that we don't need to look at that. However, the S&P 500 giving us another bullish impulse candle. So we did talk about a setup, I think, last week to go long on a daily impulse. you'd still be in it because not much happened last week. But of course, you've been able to trail your stop, and you should be pretty much on break even. And in fact, by the end of today, unless this turns around, of course, you will be at break even. Otherwise, you're marginally short of that level, which of course is what the story is all about. Limit downside and let upside look after itself. And the correlation with the NASDAQ showing itself here. So there's another bullish impulse candle for last week. And there also was that setup, so a slightly more successful trade here, if you'd taken, as you should have, a daily impulse on the NASDAQ at the, what was that? That was already on the 27th. Then again, we discussed that last week, Monday already, that the trade should have been taken first thing Monday morning last week. So if you want to know more about that, you can go and watch the video recording of our market review last week. And folks, as far as I'm concerned, that's it. So I see no questions have come through. If you do have any questions and you're watching this as a recording, please pop them into the comments below. Also, I'd really appreciate it if you'd like this video and any other videos that you might watch on our YouTube channel. And if you are interested in knowing more about our academy, you're not already part of it, then do click on one of the links that we'll have below this video. And if you haven't subscribed to this channel, then I really recommend you do. We bring out really good free training every week. And we do that mostly to look after our members and make sure that they are improving their technical analysis skills using advanced price action techniques, as well as helping them to understand if they missed something, if they took all the trades, if their consistency is improving. You're welcome. Thank you. All right, folks, so that's it from me. I hope you guys have a great week trading. Look out for an announcement for training that we're going to be doing later in the week, and I will see you then. Bye for now.